I'm really smart enough to.
Get started. Good morning. We'll call the October 26th, 2023 board meeting to order. This is a public meeting of the Philadelphia Board of Pensions and Retirement, and it's being conducted in person in the board's conference room at the board's offices on the 16th floor of 2 Penn Center. Pursuant to section 21-1503 of the Philadelphia Code, electronic recordings of the meeting will be made through Microsoft Teams conference technology and by an audio recording. An electronic recording will be made available to the public online at the board's website without charge within 10 days. Please note that you can consent to such recording by attending, participating, or speaking at the meeting. The first order of business is a motion to adopt the rules of order that are approved and used towards in-person public meetings that are electronically recorded. The purpose is to help ensure that accurate and complete audio or audio-visual recordings of the meeting occur to comply with the code requirements. That moves us to item 1. A motion to adopt our procedures for today's meeting have been made and seconded. Is there any discussion on this motion? Hearing none, we'll go to the roll. Brian?
I approve.
Francois?
Approved.
Marcia? Approved. Roosevelt?
Approved.
Paul?
Approved. Approved.
Carol?
Approved.
Motion carries unanimously. Item 2, motion to approve the minutes from our September meeting was made and properly seconded. Any discussion on this item? Hearing none. Brian?
I approve.
Francois?
Abstain.
Marcia?
Abstain.
Roosevelt?
Approved.
Paul?
Approved.
Lee?
Approved.
And Carol?
Approved.
The motion carries 5-0 with 2 noted extensions. Item 3, a motion to approve 118 pension applications and 46 withdrawal applications has been made and seconded. Any discussion on this item? Hearing none. Brian?
I approve.
Francois?
Approved.
Marcia?
Approved.
Roosevelt?
Approved.
Paul?
Approved.
Lee?
Approved.
And Carol?
Approved.
Oh, it's very dramatic. So the motion carries unanimously. I'll also note for the record that at the start of section 4, board member Alvin Powers joined us. Well, section 4, case 4A, a motion to approve the service-connected disability benefits for Sandra Goni Morales was made and seconded. Any discussion on case 4A? Hearing none from the board, I'm going to roll. Brian?
I'll abstain.
Francois?
Deny.
Marcia?
Denied.
Roosevelt?
Abstain.
Aubrey?
Deny.
Paul?
Abstain.
Lee?
Deny.
And Carol?
Abstain.
The motion fails 0-4 with 4 noted abstentions. Case 4B, a motion to approve the service-connected disability benefits for Ashley Hubbard was made and seconded. Any discussion from the board on 4B? Hearing none, we'll go to the roll. Brian?
I approve.
Francois?
Approved.
Marcia?
Approved.
Roosevelt?
Approved.
Aubrey?
Approved.
Paul?
Approved.
Lee?
Approved.
And Carol?
Approved.
The motion carries unanimously. Case 4C, a motion to approve the service-connected disability benefits for John Burley was made and seconded. Any discussion from the board on this item? Hearing none, we'll go to the roll. Brian?
I approve.
Francois?
Approved.
Marcia?
Approved.
Roosevelt?
Approved.
Aubrey?
Approved.
Paul?
Approved.
Lee?
Approved.
Sarah?
Approved.
Motion carries unanimously. Case 4D, a motion to approve the service-connected disability benefits for Robert Rednauer was made and seconded. Any discussion from the board on 4D? Hearing none, we'll go to the roll. Brian?
I abstain.
Francois?
Deny.
Marcia?
Denied.
Roosevelt?
Abstain.
Aubrey?
Deny.
Paul?
Abstain.
Lee?
Deny.
And Carol?
Abstain.
The motion fails 0-4 with 4 abstentions noted. Case 4E, a motion to approve the service-connected disability benefits for Michael Tissino was made and seconded. Any discussion on this item? Hearing none, we go to the roll. Brian,
I approve.
Francois,
Deny.
Marcia,
Deny.
Roosevelt,
I approve.
Aubrey,
Deny.
Paul,
Approve.
Blake,
Approve.
and Carol.
Approved.
The motion carries 5-3. Case 4F, a motion to approve the service-connected disability benefits for John Tuck was made and seconded. Any discussion from the board on 4F? Hearing none, we'll go to the roll. Brian,
I approve.
Francois,
Approve.
Marcia,
Approved.
Roosevelt,
Approve.
Aubrey,
Approve.
Paul,
I approve.
Blake,
Approve.
and Carol.
Approved.
Motion carries unanimously. Case 4G, motion to approve the service-connected disability benefits for Damir Moore was made and seconded. Any discussion from the board on 4G? Hearing none. Brian,
I approve.
Francois,
Deny.
Marcia,
Deny.
Roosevelt. On 4G,
Sorry. I approve. That's fine.
Aubrey,
Deny.
Paul,
I approve.
Blake,
Approve.
and Carol.
Approved.
Motion carries 5-3. Case 4H, motion to approve the service-connected disability benefits for Carleen Weich is made and seconded. Any discussion from the board on 4H? Hearing none, we'll go to a roll. Brian,
I approve.
Francois,
Deny.
Marcia,
Deny.
Roosevelt,
Approve.
Aubrey,
Deny.
Paul,
I approve.
Blake,
Deny.
and Carol.
Approved.
The vote was a tie 4-4, and as the chair vote to deny to break the ties, so the motion fails 4-5. Case 4I, the motion to approve the service-connected disability benefits for Jerome Stalwart is made and seconded. Any discussion on case 4I from the board? Hearing none, the roll. Brian,
I approve.
Francois,
Approve.
Marcia,
Approved.
Roosevelt,
Approve.
Aubrey,
Approve.
Paul,
I approve.
Blake,
Approve.
Carol.
Approved.
The motion carries unanimously. Section 5, case 5A, motion to approve the change of survivorship option regarding John Haney was made and seconded. Any discussion with the board on 5A? Hearing none, we'll go to the roll. Brian,
I'll stay.
Francois,
Deny.
Marcia,
Deny.
Roosevelt,
Abstain.
Aubrey,
Deny.
Paul,
Abstain.
Blake,
Deny.
and Carol.
The
Motion fails 0-4 with 4 noted abstentions. Section 6, case 6A, a motion to approve the application for survivorship benefits regarding Walter Teasdale, the deceased, was made and seconded. Any discussion from the board on 6A? Hearing none, we move to the roll. Brian,
Deny.
Francois,
Deny.
Marshall, Roosevelt,
Deny.
Aubrey, Paul,
I think there's
Blake,
Deny.
and Carol.
Deny.
The motion fails 0-8. Case 6B, a motion to approve the application for survivorship benefits on behalf of a medically dependent adult child regarding the deceased Joyce Clark was made and seconded. Any discussion from the board on case 6B? Hearing none, move to the roll. Brian,
I approve.
Francois,
Approved.
Marcia,
Approved.
Roosevelt,
Approved.
Aubrey,
Approved.
Paul,
I approve.
Andrea. Oh, I'm sorry, Blake.
Approved.
You know, I don't list. Carol. Carries unanimously. Case 6C, the motion to approve the application for survivorship benefits regarding Daniel Williams, the deceased, was made and seconded. Any discussion from the board on 6C? Hearing none, we'll move to the roll. Brian,
Deny.
Francois,
Deny.
Marcia,
Deny.
Roosevelt,
Deny.
Aubrey,
Deny.
Paul,
Deny.
Wade,
Deny.
and Carol.
Deny.
Motion fails 0-8. Moves us into section 7, old business, case 7A. A motion to approve the the application for service connected disability benefits for Timothy McDevitt was made and seconded. Any discussion on 7A from the board? Hearing none, we'll go to the roll. Brian,
Approve.
Francois,
Approve.
Marshall,
Approve.
Roosevelt,
Approve.
Aubrey,
Approve.
Paul,
Approve.
Blake,
Approve.
and Carol.
Approve.
Motion carries unanimously. Case 7B, a motion to approve the service connected disability benefits for Sharice Butts was made and seconded. Any discussion on 7B from the board? To the roll, Brian,
Approve.
Francois,
Deny.
Marcia,
Deny.
Roosevelt,
Approve.
Aubrey,
Deny.
Paul,
Approve.
Blake,
Approve.
Carol.
Approve.
Motion carries 5-3. Case 7C, a motion to approve the service connected disability benefits for Navarro Fisher was made and seconded. Any discussion on 7C? Hearing none, we'll go to the roll. Brian,
Abstain.
Francois,
Deny.
Marcia,
Deny.
Roosevelt,
Abstain.
Aubrey,
Deny.
Paul,
Abstain.
Blake,
Deny.
Carol.
Abstain.
Motion fails 0-4 with 4 abstentions. Case 7D, a motion to approve the service connected disability benefits beyond the 1-year deadline for the application for service connected disability benefits beyond the 1-year deadline. For Stephen Heller was made and seconded. Any discussion on case 7D? Brian,
Abstain.
Francois,
Deny.
Marcia,
Deny.
Roosevelt,
Abstain.
Aubrey,
Aye.
Paul,
Abstain.
Blake,
Deny.
and Carol. Motion fails 0-4 with 4 abstentions noted. Case 7E, a motion to approve the service connected disability benefits for Janice McCabe was made and seconded. Any discussion on case 7E? Hearing none, we'll go to the roll. Brian,
Approve.
Francois,
Deny.
Marcia,
Deny.
Roosevelt,
Approve.
Aubrey,
Deny.
Paul,
Approve.
Blake,
Approve.
and Carol.
Approve.
Motion carries 5-3. Case 7F, a motion to approve the service connected disability benefits for Katura Richardson was made and seconded. Any discussion on case 7F? To the roll, Brian,
I approve.
Marcia,
Deny.
Francois,
Deny.
So she's checking to see if we're.
I approve.
Aubrey,
Deny.
Paul,
Approve.
Blake,
Approve.
and Carol.
Approve.
The motion carries 5-3. Case 7G, a motion to approve the disability benefits for Christopher Dallas was made and seconded. Any discussion on case 7G from the board? Hearing none. Brian,
I approve.
Francois,
Approve.
Marcia,
Approve.
Roosevelt,
Approve.
Aubrey,
Approve.
Paul,
I approve.
Blake.
Approve.
Approve.
Motion carries unanimously. Case 7H, a motion to approve the service connected disability benefits for Gerald and Becky was made and seconded. Any discussion from the board on 7H? Hearing none. Brian,
I approve.
Francois,
Deny.
Marshall,
Deny.
Roosevelt,
I approve.
Aubrey,
Deny.
Paul,
I approve.
Wayne,
Approve.
and Carol.
Approve.
Motion carries 5-3. Brings us to new business and the executive director.
We did an annual CLA audit, they completed their on-site work, so, seems like everything went well. As soon as we get the audit, we will make it available. The state audit, we anticipate meeting with the state auditors sometime in the next several weeks. So they started their initial work, we'll have an on-site, I guess, kickoff meeting. And that's supposed to go hopefully soon, if it's not scheduled yet, but they indicated it'll be in the next several weeks. Just a heads up, we've received information, all city employees on a possible SEPTA strike. Just wanted to let each of you know, we have a deferred comp subcommittee scheduled for November 2nd. So, if there is a strike, it'll be October 31st, Halloween.
It'll be weird.
It'll be, if there is a strike, it will be at midnight on Halloween, October 31st. The city's keeping us up to date. The regional rails, of course, will continue to run, but all other modes except the transportation will not be available. So we are making contingency plans for employees, and the city's making contingency plans for employees. And employees have the ability to work remotely if necessary. It will not affect any deployments as of now. So we'll keep you posted. Again, I mentioned November 2nd, that's the first time subcommittee. I think Chris will be reaching out to those on the subcommittee, Jack and Brian, Roosevelt, and the controllers representative prior to the meeting, just to go over some things. So, and then I also wanted to mention that we had the privilege of giving a seminar / presentation to the executive committee of DC 47 last week, arranged by Carol, President Union. So Shahid, Erica Muzan, Sakina Barnes, Bill, and myself were able to have a nice interactive discussion with the executive team of DC 47. Carol, thank you for inviting us, and I think we all went very well.
And thank y'all for coming. They're very informative. Just let me know that my presentation and orientation was right on. So everything Brandon said, is a lot of telling everybody, but thank you very much. Very good, and they enjoyed it as well.
So that means either Carol and I are right on or right off.
Yeah. Right now, right on. Right now, right on.
Yeah. Kids no in between.
That's it. I know, Paul, I know I talked to you earlier. Carol, I don't know if you were mentioning, where's always at the education conference, NC first.
Yeah, it was very informative. They're going to be in sequence of stuff. I was talking to one of the executives, and they was talking about starting on education on it won't come to me right now. That's Ryan just put me in the spot.
I'm glad that it was helpful to you, and that's good, especially any new trustees. As Carol says, it's a good education, a good introduction to fiduciary duty in various aspects. I know they had an actuary there giving presentations about how to value funds and things like that. So it's good. Of course, Carol's on the board there, so it's a good organization.
Yeah, so we had, for all night, over the week, we were in separate classes. So I went to the advanced class and he went to the accredited class. But in the advanced class, it was actually there. Matter of fact, it was, what was our actuary? The dude from Siegel. The Siegel markup. So they were there, and the young lady was very, very good. So one of the questions was, what should trustees ask of their managers when they're interviewing, or private equity, about private equity, stuff like that. So the young lady said, you don't have to put that because I already vetted them, and they was all right. And I told her absolutely incorrect. So, because you vetted them don't mean we don't ask the question. So but it worked out. That's what. And I just gave us some questions that we asked about managers, like what was your worst deal? How did you make it out? Does the general partner have the last say so? Or who has to say so on how to deal with those stuff like that? And this to say that how, sometimes they answer that, our investment staff one way, but they answer the trustees another way. So it's not always this, you don't talk to them because we vetted them that was better. But it was very, very good. But one thing I did learn that I didn't know the state of Pennsylvania tax the insurance company. This is how they got additional income. They tax the, out-of-state insurance company. Did you know that?
I do.
Oh,
Yeah,
okay.
we
We need
get,
to look at some more money.
we get it fee. No, we get it.
Oh, I didn't know we got a thing, cause I was ready to be ready.
No, that's right, yeah. We do.
We get some more money.
We get a piece of that.
Yeah.
Yeah, unfortunately, we get, it's proportional, so if we would get everything based on our percentage, because we're such a large city and state, we would get probably all the fund, but we don't, percentages that we should get, but we get the percentage that the statute legally allows us.
All right, that was.
And it's good, it's glad you mentioned the thing about the private equity, because it does show that, and I see this, talking to other people, it shows the difference in this board versus a lot of other boards. And with all due respect, Dave and Quaku, a lot of other boards just simply listen to exactly what is recommended to them. We have a very, good staff that investigates all of the possible investments, and a very, good, knowledgeable, and inquisitive board of trustees that also wants to know answers and not simply take blindly recommendations. So that does differentiate our boards from a lot of other boards out there. So I'm glad you brought that up, Carol.
Yeah, she did, her name was Rose, but all in all, Rose did a good presentation, and she really was informative, except for that one part. But she did. But she did, thank me for bringing that to the forefront, but she was very, otherwise than she.
Good. Thanks for sharing that. That's really good.
Friends, is there anything on the papers fall workshop we should talk?
There is, it's in the materials, but I guess it's good to bring out, is papers, it's having a fall workshop, it's when we're gonna grade. It's in Harrisburg, and that's the state organization, the state equivalent, that's the first program. And that's November 8th, so I don't think you can make a motion on this. So if anyone would like to make a motion, if anyone would like to attend, now would be the time.
I'm going to take, but I'll make a motion, I'll second your motion.
I will make the motion now in the tax direction that any staff or trustee that wants to attend the paper workshop.
Second.
A motion was made and properly seconded to approve staff and trustees to attend different fall workshop who wish to do so. Any discussion on that motion?
So is it a 2-day or is it a 1-day period? I did,
Yes, Thursday, November 9th, and it's Wednesday, November 8th.
Other discussion on that motion? Hearing now, go to roll. Brian. Francois.
Approved.
Marcia. Approved. Roosevelt.
Approved.
Aubrey.
Approved.
Paul.
Approved.
Ray.
Approved.
And Carol. Motion carries unanimously. Any other new business before the board?
I don't know if it's the whole deck, I just want to bring up, but, I guess it's more of a personnel issue. I didn't have a chance to talk to Marcia yet, but I just want to ask the question. So the HR departments are scheduling employees for their exit interview. But they're not sending them report of separation. Therefore, the employee can't get a pension check. They can't connect with deferred comp. And then they're not returning the employee's phone call because the position is no longer employed. So the employee is off the payroll. Right? They dropped out. This is what dropped. So this is what's happening. They dropped out, they dropped. And they come to pensions. It's not a pension issue, not a deferred comp issue. It's HR issue. So I would just want to know if there's some kind of classes or letters or something being done with these HR people that tell them, well, then don't send them here for the exit interview because the person who really wants to withdraw some of their money better be dropped or deferred comp. And they can't do deferred comp because they don't have the separation, letter of separation. And if they would have did it prior to leaving, then it would become a loan. Am I right, Brad? Yeah, so it would become a loan. So I guess, and I don't know if it's so much of an issue here, but since I got the personnel deputy director attention here. Cause I'm really tired of getting these phone calls.
Okay, do we,
I'm tired of bugging the staff about these issues and trying to help the members get their money, because when people leave, they want their money. So I'm just saying that HR gotta do a better job on, getting these, if they wanna schedule them, first of all, you're wasting staff time over here, because they could be doing something, well, it's not a waste of time, I won't say that. But it's just aggravating, because then we have to follow suit, because the person can't get their money, whatever it is. There's nothing getting better.
Yesterday discussing this, I confirmed out, I made sure, so the pension board, if you called here yesterday, if the report of separation showed up yesterday, your appointment's the first week of November, so it's nothing here. I confirmed that yesterday. But it's a big problem. I have folks that are 6 months without income right now. And it's because that report of separation. And it didn't used to be that way. A year ago, my folks were 3 months, which is long but acceptable. It is what it is. But 6 months, it's not acceptable.
Yeah, but see, back on the record, I tell people 6 to 8 weeks. Don't bug them, don't call my pension people, don't bug them, you gotta wait 6 to 8 weeks, so play in 6 to 8 weeks. But now, you can't get in touch with them, you out.
okay, it would be helpful if, I hear what you're saying. And I appreciate it because, I think we do have some opportunities that I'm gonna be very transparent with the HR community. However, it would be helpful if we knew what specific departments are there, because what we generally do, we've addressed this, I think, not at the last HR manager meeting, but in the September meeting. We addressed this very point about timely reports of separation. So every report of separation that's not done timely has to be signed off by Michael McCagney. And the department has to explain the reasons why that report of separation was done late. So if you have, okay, so I took down fire. Okay,
Yes.
okay,
And again, it wasn't, for all the years I've been here, it was never like this, barring a couple of upticks in retirements, that's fine. About a year ago this started, but whatever changed, I have my theories, I won't put them out there now, it changed about a year ago. Where this got a lot longer. I don't know what changed.
I follow up on both these two departments.
And somebody had a problem with health, but I'm not gonna say health is amazing. DBH, guess, is worse than health.
Okay, I write help down too. Okay, and we will follow up and come back to you. Okay. Is there any other departments? Let me know.
It was, the person actually sent out an email,
From,
and she copied you on it.
okay,
So you
and that's the
think-
lady you were talking to
Yes,
me about?
yes,
Okay, okay,
And she gave a good explanation of that, the process.
okay, all right. Was she the HR person or the employee?
She's an employee.
Okay.
Thank you.
That's the reason the ground line will get to that. Any other new business? That moves us to the litigation summary.
There aren't many changes, but Ryan did get one piece to sort of.
We got a case,
That's Brian, not Brian.
I didn't do a thing.
I
I see you turn your head. You're good, Brian.
No, not that good.
On the bicycle.
Great, motion to adjourn has been made and seconded, hearing no objections, motion carries unanimously, we'll move into the deferred compensation plan meeting.
Write it down.
All right, item 1 is to approve our minutes from the previous meeting. Motion was made and seconded. Any discussion on this item? Hearing none, I'll ask for your vote on the minutes approval. Brian, Francois, Marcia.
Approve. Oh, abstain. Yeah, I wasn't here.
No problem. Rosa,
Approve.
Aubrey,
Approve.
Paul,
I approve.
Blake,
Approve.
and Carol.
Approved.
Motion carries 6-0 with 2 noted abstentions. That moves us into the plan update and activity report.
Thank you, Jack. Good morning. Just a couple of quick notes. Fran mentioned the subcommittee next week, and I will get an email explanation out to the members early next week. Also, we should have the last quarter mutual fund performance at the After this number seven, that.
Morning, everyone. I do want to first, unfortunately, we had a family event this week. So she was unable to attend, so I apologize for all stuff with me. So for the month of September, the ending balance of the 457 claim was $1,724,563,770. 25,405 total plan participants. 19,682 of them are actively deferring into the plan. There were 147 new enrollments for the month of September. And there are 5,723 inactive participants. Philadelphia Parking Authority has 533 participants in the plan. And Philadelphia Housing Development Corporation has 43 participants. Parking Authority had 3 new enrollments for the month and HDC had 1. The 401A plan as of September 30th was $2,944,157.08 with 1,039 participants that have a balance. Solutions, thank you, Roosevelt. Solution Center received 3,158 calls in the month of September. That was a decrease of 340 from the month of August. 19,356 participants have set up a web account on Philly457.com. There are 1,910 participants that are utilizing the percentage contribution option in the plan. That's an increase of 35 participants since the month of August. And the Roth 457 has 6,253 participants contributing on a Roth basis. And that's an increase of about 133 participants since the month of August. If there are no questions, I'll move right into the local team activity report. So for the month of September, the local service team conducted 170 individual one-on-one consultations, resulting in 32 enrollments done directly with the retirement specialist. And 22 of those consultations were conducted using the My Interactive Retirement Planner. Really strong month over the course of group events and workshops. We conducted 36 workshops in the month of September, and total attendees were 939 for the month. And I'm not going to drop my pen anymore. With that, I conclude my report.
Well, did you have a class 101?
Yes,
I,
highs we've had in probably the last 5 years.
Oh, wow.
Good.
Follow-up question, is it keeping up with retirement?
Right.
I had it.
It's just good to see the number.
Yeah.
It is.
Yeah.
We're working on some legislation, like, Harrisburg also, for a couple of things with the exit tests and the
Yes.
residency and things of that nature. Yeah. I'm sorry.
So,
Good, thank you.
some dumb cake.
Yeah.
Any other questions for Nation? Right. A motion to adjourn the third prompt has been made and seconded. Thanks, guys. Sorry. Just made and seconded. Any discussion? Hearing none, we'll take a 5-minute break and we'll do two investments in about 5 minutes. Thank you.
You made it a second.
Yes. We did not.
Great.
Hey, Greg, I gave you 2 doing I want you to die. Being it's not here, you are nervous. There you go. Being it's not here, you are nervous. Yeah.
The EMS issue, medic.
Okay, let's start.
Yeah.
Call this meeting of the investment committee to order. The first item is approval of the minutes from the September 23 meeting. Is there a motion?
I'll make the motion to approve.
Thank you.
Second, been moved properly seconded. I will call the roll. Francois. Abstain. Paul. Approve. Brian.
I approve.
Roosevelt. Approve. Carol.
Approved.
Marcia.
Approved.
Aubrey. Approve.
So you must want to do this. You can
Yeah,
have.
what, that's fine, I like it. You're messing me up, man.
I'm just doing a visual now. It used to be the active on the list, so it made some sense, and now it's just whatever comes from.
For women's day.
Okay, I am turning it over to investment staff.
Morning.
Good morning.
Morning. As part of the investment, piece, the investment components of continue the asset allocation discussion that began a couple of months ago. And there is a short supplementary recommendation memo with ground folders on the table. And
Right here.
So on page 4 of in your binders on the asset allocation document, you'll see the various portfolio options, the current, the investment policy target, mixed A, mixed B, and mixed C.
So you're looking at the page that at the bottom, you have the average return.
Oh, it's in the binder.
Correct.
Yeah, in the binder.
Oh, fine.
In number 2, it's like 4 pages back.
Correct.
No, 4 pages back. They're from the.
Section here. Section. Right, and then like this.
You're going the wrong way. Well, we're back with the tab 2. Oh, yeah, looks like your binder's different from mine.
Binders, some of the, these binders need to go.
Yeah, and Francois is different.
So in my, I think we all are.
But they show when you can find it.
So,
So you want to talk through it and we'll follow along.
okay, you know,
I don't think you can. I don't think you can.
I don't have it.
okay.
We'll just listen.
So, here's a weird question. How many people actually can find it? Is it here? Did you get this?
Yeah,
I remember looking at it, checking.
so it's in this one.
Yeah, oh, you got it.
Page 4 in the deal.
Little bind.
Sorry about that.
Oh, okay.
I left out.
That's interesting. I didn't have a little binder.
I forgot about it. You didn't get this?
No, but we had to do another document.
Then you go get the document. No.
All right, so everybody now, I guess, has it either in the little binder or in there.
The other one that comes.
Okay, I think we're ready.
Sorry.
You were just testing us.
Sorry. So you see the 5 mixes, the current, the investment policy, mix A, mix B, and mix C. Mix B and mix C are the same as what we discussed last month. Mix A is the mix that we talked about at the end of the meeting. About what would happen or what would things look like if we've only added 5% to fixed income as opposed to the larger jump in mix B. Mix B is still the recommended mix for staff and Marquette. But I'm gonna let Marquette walk through the rationale. I have some comments about the timeline, which I talked about with a couple of you. And I've got a couple other questions from folks about things within the asset mixes that we can talk. So, waiting the date wants to start.
Yeah, just to sum up, what Chris mentioned, mixes A and B are the mixes of focus. So B is really the, long-term or the strategic recommendation. In taking some of the feedback and comments from the last meeting regarding the pretty healthy jump in fixed income, where we go from the current allocation where it's around 11% to 21% in mixed B, that's a 10% differential. We have mix A as that interim allocation. So it just gives you a sense of, as we're transitioning from the current allocation or the approved allocation to our recommendation of mix B. Mix A is basically your midpoint, and it gives you a sense of what the expected return and risk would be from a modest bump up in fixed income. So that would be 4% going from the current allocation to mix A. Really, as we think about the overall rationale of the asset allocation, kind of like what we discussed last month, we're looking to bring down volatility a little bit. The target rate of return has continued to go down pretty steadily. So we're just looking to de-risk the portfolio in a pretty thoughtful way. So that, from a high level, is talking about the asset allocation and the relevance of mix A and mix B.
And can you talk about volatility, that volatility return are slightly different for A and B?
Yep.
So one of the questions is, why wouldn't we just stay with A? Talk to me. Why do you think we wouldn't stay with A?
Yeah, absolutely. So with A, we do have a modest increase in fixed income. We increased the fixed income allocation by 4%, essentially. Even more. So it goes from 9.75 under mix A down to 8.78 with mix B. The reduction in returns is still gives us a healthy cushion with respect to the target rate return. So mix B ends up being attractive from an overall volatility standpoint, getting us to under 9%. The 9.75 is, in our opinion, a move in the right direction. But ultimately, mix B, the downside of mix B, the volatility of mix B, the increased liquidity, all of that is very appealing with that 7.44 rate of return. Dave, anything to add?
Yeah, so that measure at the very bottom, the average return per average volatility, is also referred to as the Sharpe ratio. And we're trying to evaluate here is return per unit of volatility. Portfolio B is a more efficient return. We have high return per unit of volatility, still in excess of our desired actuarial rate of return, but with less movement around.
And we talked about this last time, but just to make the conversation complete, C actually has a better Sharpe ratio, right? So you need to talk through again what the issue.
Sure. So mix C would start to increase the allocation of private markets. Private markets demonstrate or display less volatility because you have fewer, you just have less mark to market. So while that Sharpe ratio may improve, we're starting to reduce our overall liquidity. So we're trading one risk for the other.
And then the other, well, not a risk, but the other thing to be conscious of with mix C is the, significant increase in fees associated with private markets. So that's also something we're juggling as we're looking at the Sharpe ratio, efficiencies, risk, liquidity, and so on.
I just have a question about the core bonds and about the makeup of them, those short-term, long-term, how's that work?
Yeah, so these are aggregate bond investments. So you're looking at investment grade, you're more steady any type of fixed income manager. So that's really at the end of the day. And then that's a result of yields going up. So, 10 years ago, we would be having this discussion. We'd be looking at places in the market to actually find some yield. Today, the market is finally yielding something. So even your more plain vanilla type of fixed income is a pretty decent source of return.
But are they, so it's a basket of a bunch of different lengths of maturity, or are they an index, or what is Like what is, you know,
So if so this is based on index return, so the Bloomberg aggregate bond index, based on investment grade corporate mortgage-backed securities and treasuries. The duration of that benchmark is 6.3 years. Okay, we can talk about that a little bit more, but basically duration is a measure of interest rate sensitivity. If those rates go up 1%, bond prices go down 6%, and the inverse is true, right? But in all likelihood, we will look to either use our existing managers or perhaps other managers. Managers in this space tend to overweight corporate credit, slight yield advantage relative to treasuries, and that can add to incremental returns without massively increasing good asset class ranking.
And there is an accompanying memo, so the memo kind of outlines, it recognizes that it's a material shift in fixed income. It's not something that's going to happen overnight. As part of the discussion and analysis that staff and Marquette will be bringing to the board, we'll also essentially kick the tires and just reinforce whether we stick with the existing managers or if there are other managers to add to the roster. So that's all part of the implementation that's taking place.
And can you talk about that implementation? How long you think it would take to get from where we are now to 60? What expect going?
So there's always a couple of disclaimers, only because we have a Fed that's
And we just ignore those.
it's very different. So that's the honest answer, that's the consulting explanation, but as we think about moving from the current allocation to mix A, again, from a perfect storm standpoint, let's assume that January 1st of next year, the Fed is very explicit in terms of its interest rate policy, where things are going to end, essentially whether it's going to cut, whether it's going to pause. We could.
There were things that will never happen.
Yes, basically. So that's but stranger things have happened in the United States over the last couple of years. With that in mind, the best case scenario would be, okay, around the end of the second quarter, we could be looking at, the transition of around 4% of assets to fixed income. But again, with the caveats of, we have a tough start to the year. The Fed continues to be gray around interest rate policy, liquidity ties up, or is locked up. All of these things would extend the timeline from that 2Q deadline. So I believe the goal of staff and Marquette would be on a monthly basis, or every other month, we'd circle back on what we're recommending from a implementation or transition standpoint. And we give you a sense of where the market is, why we think it makes sense to make the trade at this point. And we'll continue to give you updates on where we're progressing in the transition. So end of 2Q would be a very optimistic scenario, but we can definitely push that out a little bit more, going from current to mix A. Going from the current to mix B will take a lot longer. We're probably looking at a minimum of 3 to 4 quarters. And again, with the 3 to 4 quarters, going 3 to 4 quarters from the second quarter of last year.
And so that's the best case scenario.
That's the best case scenario.
So we're probably talking really a couple of years before we could actually get this.
So yeah, we could be looking well into 2025 before everything's implemented. And that's just because fixed income is no longer this boring asset class, or the markets are no longer as boring. They're not just going up all the time. Fixed income behavior is less predictable today. GDP numbers just came out. Bill just shot those over. 2 days ago, the Fed said we're going to pause. GDP numbers came out. They're probably just joking on pause, and then we're going to have to figure out what that means in terms of signaling and noise and all that good stuff. But again, a very optimistic scenario would be the end of 2Q from current to mix A. So if we are in the early parts of 2024, saying that we may go a little bit beyond 2Q, that's an example of, hey, the market continues to be pretty volatile. Doesn't make sense to make a huge swing in the portfolio. And then if we go beyond the 1 year from the second quarter, again, it's emblematic of the Fed, the interest rate environment, and then basically where the economy may be. Because again, a good GDP number should be something we celebrate. But that good GDP number could again just force an action that pushes us one step closer to less of a soft landing, a harder landing.
Or it doesn't economy, like what's happened so far. It's go up and the economy keeps growing.
That would be a nice,
Yeah.
that would be a nice outcome, but, again, kind of like the, whether it's the tech bubble, the housing bubble, tulip bubble.
Those are the only two.
Yes, what's happening with interest rates is an example of, if an earthquake happens and you're not right near the epicenter, you might not feel it, but the aftershock, could be something that's, somewhat damaging. So that's the concern with interest rate policy now. It's a lagged indicator. This lagged indicator continues to, get jacked up without really, assessing the actual, yeah.
I want to go back to your question briefly. I know you're not here when the managers, fixed income manager make presentations. When they make the presentations, they do dig down deep into what their portfolio is composed of. Chris, I'm doing staff, be glad to sit down with them and go into details of it,
Yeah, I know, it's just that,
with various durations.
I know Andrea asked about it last month about that too. It's just, if we're looking at things are happening, it's almost up to, there's almost up to 5 again.
And then Chris and staff.
Well, all right, yeah, appreciate it. And then I just have one last question just about, especially, although the market's really up since the start of the year, it's come down in a sense, last week. Excuse me, I'm sorry. As you're moving from one asset allocation to another, are there concerns about selling as things are down right now versus, and then buying things, or how does that work?
Yeah, so the implementation, it always takes place over a number of quarters to address and tackle the issue that you just mentioned, right? We never want to be in a position where for the sake of just following something on a piece of paper, we're going to sell at the wrong time and buy at the wrong time. So the implementation will take into account the need to move to a new asset allocation, but B, whether it makes sense or not. So if, for example, we still think there's going to be pain in the fixed income market, that's going to be an example of a development that will extend out the timeline. If we do feel that, let's say, for example, it's a rip the Band-Aid off moment where we do go through a short recession, but those interest rates and then interest rates are then normal, that kind of gives us a green light to move forward with a little bit more speed. So definitely taking into account the market, the nuances of the market. I will say this, from our standpoint, it's probably a really good entry point if we think about the relative performance of equities and fixed income. Equities, even though they've come down, they've had a tremendous run. Even with the bad market last year, equities, you're rebalancing from an asset class that's added significant value, and then fixed income has come down meaningfully in value. So you're actually buying a pretty nice bargain when you look at it in that context. But again, we are very mindful and thoughtful, and that goes into why staff and Marquette would be providing frequent updates. So that way we're not just blanket buying and selling without any consideration to what it means for, where we are in the cycle.
The other thing is because we get the state aid, at the end of the year, some of the quasi agency money, we have a healthy cash balance. And then in the first quarter of next year is when you receive the RFP, the bulk of that. Last year, that was around $578 billion. So as you're transitioning, that also provides an opportunity to not sell, to just use cash to make that, at least preliminarily. And the other benefit is that, with cash, essentially the overnight account paying over 5%, it gives you a little bit of additional leeway to move more slowly if you're worried about the entry. But yeah, and to Fran's point, we're happy to walk through, any of the managers, the ones that in your book, when you're looking at, would, in all likelihood, if we didn't hire anyone new, would be either the Index or Rumline, Garcia Hamilton or Longfellow, MetLife, perhaps, but it's probably really those three of the current roster that would be most likely to get the bulk of these current funds.
Any other questions? And so, need a motion to accept the recommendation.
Carol did have one question that he asked, and I'm sorry, Carol. Carol had asked if you look at the totals for, I think, really any of the 5 for equities and non-US equities, the totals of the individuals, like for example, in mix A, you see 14% broad US, non-US equity, 2% emerging markets, 8% global low vol. That doesn't add up to 19.6. The reason for that, partially explained, but not fully, to Carol's point in the footnote, is because Marquette's accounting for the actual makeup on average of global low vol, which is around 55% US, 45% non-US. That's what's skewing the percentages because they're accounting for the difference.
It's mostly national low vol.
Correct. So, that's the reason why those two don't add up perfectly, because they're taking in the global low vol, 55% is US and 45% is international. So thank you for that question, Carol.
Big time.
Not really, but yeah, go ahead, because this look like that, I see it says it's composed of 55% US and 45% non-US, but in the demonstration, you got 8% and 5%, so it's not, to me, the numbers are not there, but I'll be good. Is there something?
Yeah, so I think they're saying for that 8%, it's 55% of that 8%.
Yeah, so that's what I'm saying, the explanation is not clear.
Yeah, and then if you do the math, that does get you to the
It
19.6.
does get to 19 points. All right, got it.
And maybe Chris could do like a little table that shows how that works, so we can get there.
Yeah, we can send that.
That would be great.
Send out a follow-up with the breakdown.
Any other questions? Okay, so is there a motion to accept the recommendation? Move to next meeting.
I'll make the motion to, adopt the recommendations next meeting.
There's that second, been moved and properly second, and I think all the roll will be approved. Aubrey? Approved. Marcia?
Approved.
Carol?
Approved.
Roosevelt? Approved. Ryan?
I approve. Something.
Francois?
Approved.
I didn't sing myself.
I was gonna say, you know, yes, but you can't.
Everybody's Jackie.
No, that's very clear. Okay. You're back to Chris.
Thanks. In terms of the performance for the month, some of this was discussed obviously during the asset allocation and some of the questions we got. It's been a rough September and then into October for the market, which obviously been a lot of things to keep an eye on. Interest rates continuing to press higher, 20-year to 30 years, reaching 5%. Government debt or deficits continue to run higher, which has led to some concern about an appetite or lack thereof for all the treasuries that have been issued. Obviously, the Middle East, Ukraine, notwithstanding the finally getting the speaker yesterday, still the threat of a government shutdown on the 17th of next month. Seeing a lot of weakness in European and Chinese economies. The EU or the EDP rather didn't raise rates this morning. Chinese economy is really having some problems around property. Evergrande, basically already in wind down mode. But you mentioned the 4.9% GDP, which, like you said, in ordinary times would be something you're really excited about. But given interest rate and concerns about how long consumers can kind of continue to spend, I think that's driving a lot of negative sentiment. And then the earnings are also somewhat confusing. One of the reasons why the NASDAQ in particular is now in correction territory as of yesterday. You look at three stocks, really, Meta, which is Facebook, had a huge beat on their earnings yesterday. after hours. The stock originally after hours went up about 40%. Today it's down 6. Despite that, Google also had a massive beat on their earnings, but folks focused on the fact that one of their divisions, the cloud computing division, did poorly. The stock was down 9% yesterday, and then it's down another 3 today.
They were part of
The Magnificent
right?
Seven.
Yeah.
Yeah, they're part of that Magnificent Seven that has like really pulled the stock market up, particularly the NASDAQ. It's causing, the kind of correction now. Amazon will report after hours today. Last I looked, they were down about 1.5%, 2% even before earnings were announced. So those 7 stocks, or in this case, the 3 that I've mentioned, are driving a lot of the downward draft in the NASDAQ. Returns last month a little under the benchmark net fees, down about 3.2%, which is similar to the fiscal year to date numbers. Calendar year to date up about 3%, almost in line with the benchmark. Couple of managers to highlight, and Wake or Dave have some notes, and obviously happy to take questions on any manager that you want to highlight. But a couple that we wanted to highlight with recent or mid to short term performance concerns would be Capital Group, Fidelity. Both of those in the non-US equity developed composite. So I don't know if you want to walk through notes or comments on each of them, and obviously respond to questions.
Sure, and just a few comments, the Capital Group, much of this has to do with weightings around technology and energy. Energy over the last quarter is the only sector within the index and the S&P 5. It was a positive territory. Capital Group is underweight energy, underweight in sectors to performed well. It's been dragged, and then they have a large overweight to technology. Technology, to Chris's point, has sold off significantly since July 31st highs due to excessive valuations and a number of other circumstances.
Is that how expected they be investing as kind of a, weighting of the portfolio? So it's just kind of what we would expect it to happen in the stock market.
The short answer, it is. And the other part of that is within our index exposure, we have market weights to energy, to technology, to individual securities. So we do have market weight exposure. This is a chance to benefit from active management and hopefully take advantage of growth and value opportunities where they exist. And over a shorter term period of time, there will be fluctuations. Valuations were lofty, higher interest rates brings down those valuations, but over the short term, very difficult to interpret or expect energy prices, especially when they have conflict in the Middle East.
And when would you get concerned about that? Like, what would you see them not, that's something we should really worry about?
Yeah, so the short answer is market cycle. I would put that in 3 years. This is a manager that's very large, very seasoned, very talented, has a very long track record, deep bench with technology. These are concerns that we would not have over a short term period of time for a very large asset.
So what about a long period of time?
Well, yeah, long period of time.
You didn't answer the question for me, so.
3 years is my number. If we had 3 years of underperformance, that would be a problem. We have 1 year challenge with capital.
And then just to give a little context, they were put in place as a complement to Causeway. So we initially, going back in 2021, there was some concerns with Causeway. It's more quality, it's more value leaning. The fact it's more quality, more value leaning meant that Causeway was underperforming. So when we went out and we were looking at a complement to Causeway, we were looking at the manager that is taking different bets. And as a result of that, there will be periods where perhaps Causeway is performing well, Capital Group is underperforming, and then we flip that to when your growthier names are doing well, you can probably expect Causeway to be lagging Capital Group. So in the context of the manager lineup, these are complements to one another, and that was really, again, driven by Causeway and the fact that Causeway can go through periods of underperformance. The numbers are really good right now for Causeway, but again, back in 2021, there were concerns with Causeway, its performance relative to the index, which led to Capital Group coming in and Capital Group really being put in place as a complement to Causeway.
They moved for 23.1% profit in 1 year. a decrease. In my meeting, right?
Form those one here.
Yeah, the vote on those gonna be there. So, this, we should wait for them, see if they can do it 3 years.
That is a reasonable amount of time. It's quick to support. If you have a value bias manager with Causeway underperformed. And this, so another way of thinking about this is every player on the team, and every player has a purpose on this team. If we just had a value-based or value bias manager during periods where value sells off, that's the problem.
So,
Sometimes they're all not hitting at the same time.
so if we jump into the calendar year, the calendar year performance page, so this is, I don't have a page number, but it is in your books. It is in your books. It's
Like this,
Yeah, it would be great to pick numbers on the.
typically do. I'm not sure what happened.
Yeah, usually they are numbered.
Yeah, typically you do, so I'm not sure, I'll blame ChatGPT, but just calendar year numbers, the takeaway here is Causeway.
Yeah.
And I think this is really, really important to emphasize. We were in a discussion where Causeway back in 2021, they were underperforming, they were down 8.4%. They were up 8.4%, the index was up 11.3. We looked at their historical numbers, 2019, the top period, they were down 17%. And again, with Causeway being a value.
you mean 2018? 2018, because 2019, it was up.
2018, that's what I think. So the point there is with Causeway, they are a value manager. The value style can go out of favor, but value is in favor right now. Capital Group is more growth leaning. Growth is more out of favor internationally right now. And in the context of, we have two managers that are supposed to be complements with each other. It's too early at this point with Causeway to say that, okay, let's eliminate Causeway. They literally just got put in the portfolio with Capital Group. Capital Group was literally just put in the portfolio. It is important to let that manager, again, do what it's supposed to do and have them evaluated over a full market cycle. We run the challenge of taking action every single time a manager kind of dislocates from the market. And that if we use Causeway as an example, Causeway, staying the Causeway has been a really good thing for us in the plan. Causeway has been able to ride the value cycle and value coming in favor internationally. And we also believe that with Capital Group, some of the underweights that they've had, an underweight to energy, that's actually an okay thing from our standpoint. We don't necessarily want a manager that's loading up on big energy bets, with energy being one of the more volatile segments in the marketplace. So the reason for the underperformance is explainable, but we are happy to do a deeper dive and take another look at the manager if that's the pleasure of the board. But we do feel a full market cycle would make sense to assess them over.
I assume the 3-year period is based on being in a full market cycle. But given the unusual circumstances that we've had with interest rates, that's going to average. So do we anticipate that we will see a full market cycle by February of 2024, which I think will be 3 years? The Capital Group.
Yeah, I think that's a reasonable assumption. And just, we went through this exercise, to your point earlier. This board studies managers extensively, and part of that evaluation did look at historical performance. Probably a very simple way to just alleviate some of the concerns, come back with Capital Group's calendar year performance, so we can put it alongside Causeways, look at their annualized return. That was part of the evaluation process, and that will tell a more complete story. We had a very narrow story.
Keep thinking back to the memo that one of the folks did on the education seminars is value debt, and remember value versus good. It's always a very good memo. It's always interesting. So, the market's always changing. But we're in a beautiful market cycle. So,
And Tom, you're gonna tell us the date of the market cycle. This don't say 3 years, so 3 years, if I'm looking, is 2027, 2026. If you were to say by next year they were in the 3 years, then if you give us a date and time, it looks a little different this way.
That's 3 years, give or take, just to be perfect.
I know, give or take.
Um, Oh, and I guess
Really,
the thing you can do if you dig deeper into capital that we don't see here is their returns before they entered our portfolio. We have a short amount of time.
That's fine. Yep.
And to Carol's point, it's 3 years from when they entered our portfolio, not 3 years from today. That we're talking about portfolios, I guess. There are other managers you guys want to highlight?
Well, Fidelity is the other manager that I think is probably been pointed out as a concern. And again, we have two global managers, both have a specific purpose, and FS is performing better than Fidelity. Fidelity has been significantly overweight. We described the Magnificent Seven. Those names represent almost 28% of the S&P 500. In aggregate, those names perform incredibly well. Being underweight those names should be beneficial to the portfolio as those names are selling off. If we had two managers that have overweights to that Magnificent Seven, we just exacerbate our policy.
So when we see the October numbers, Fidelity should be doing pretty well, right? Because the managers that are in a bad month.
That's right.
Good. So that seems like a pretty immediate bet for them. Anybody else? Any other users? Questions? Okay.
Just on the staff reports, we have the securities lending income summary. For September, there was 138,277. Calendar year to date, 1.339 million. 53.27 since the inception of the program. Diverse and local AUM on a combined basis just below 61%. MWBBE managers on a standalone basis, 53.1. And local and surrounding counties, 9.4%. And then the calendars, we confirmed the December 7th date, there won't be a November meeting. January 25th and February 22nd.
Any questions? Okay, any new business? It's one piece of new business. What did we done in this last meeting? So I was going to say next flower you buy. Not here to you Carl his next thing.
She can watch the video.
Any old business? Then it's been moved, probably second to adjourn, and we are adjourned. Call the full board into Justin. Is there a motion to ratify the action taken by the vesting board? And defer comp, I do that every month, thank you.
Make a motion.
Thanks. There's that. Is that? Okay, Francois. Oh. That's all I wanted. Oh, you talked about Paul. Approved. Brian. Coach Bell. Carol. Marcia. Audrey. Approved. Okay, approved. Thank you very much. Any new business? Any old business? Moved to probably second year adjourned, and we are adjourned. Thank you all very much. See you in December. Yeah. Yes. Yeah.